Hi there. This is Eric Donesco, head coach here at Maximum Acceleration. And I've got a special invitation for you that I'm very excited and feel privileged and honored to be able to introduce you to. We all know that credit is one of the biggest obstacles that borrowers have to obtaining a loan. I know that I took a short break from originating between 2002 and 2009. And when I got back in the industry and started originating again in 2009, I was shocked at how many deals that I could have done in 2002 that were more than qualifiable borrowers, especially per FHA or VA underwriting guidelines, that I couldn't do because their scores were just a hair too low. I know we've all seen the pain of that type of situation in our origination careers. The borrower you really want to help, that bad things happen to good people, and you want to give them a little grace because you know they've worked through their challenges and they've established themselves and they've demonstrated good habits when it comes to credit management, but yet the score is not an accurate reflection of their actual credit risk. How often is it that things are inaccurate on their credit report, and that is negatively impacting their credit score? Let's be honest. What is a credit score really supposed to be? Well, it's supposed to be a fair assessment of their overall risk, and it's based on positive points for responsible use of credit and negative points for irresponsible use of credit. But how often is it that the credit report has bad information in the report that's throwing off the numbers, and the mathematical algorithms that calculate that credit score are inaccurate? Well, we've got a very special program that I want to invite you to participate in called Becoming Educated in Credit. This is a 5-part web shop program, and my good friend and colleague, someone who I have considered really a privilege to have had the opportunity to meet and develop a relationship with over the years, is Mr. James Charlet. And James is going to be our instructor for this Becoming a Credit Educator course, walking us through what we need to understand about the nuances of the credit scores and why it is that our client's score is not an accurate reflection of their credit. For example, paying off a collection. Well, think about it. Paying off an old collection should be an improvement to their score because that's a responsible credit behavior. Yet how often is it that they pay off the collection and the score goes down, not up? Well, most likely it's because the collection agency is misreporting important dates and important classification codes that have to do with that collection account. Because if it's reported accurately, the score should in fact at least stay the same, if not go up a little bit when a borrower actually pays off a collection. Most likely it's an issue of the fact that the collection agency who held that account put the date that they paid it in the date of last delinquency box in the scoring model. And that's making it look to the scoring algorithm like it's a brand new collection for that original date of delinquency. It's those little nuances and things like that that I had the opportunity to learn from James briefly over the last couple of years as I've gotten to know him. I literally learned more from him in 45 minutes than I did from a 2-day workshop that was put on by Equifax in 2008. So it's a really, truly an honor and a privilege for me to introduce James to you and to have you give you the opportunity to be able to learn from one of the true masters of understanding the nuances of the credit scoring models, how to educate our clients on responsible, ethical, and morally sound behavior that will drive an improvement to their credit habits, their credit management, and therefore their credit scores. Now, I want to be very clear here. We are not talking about credit repair of the old days where you have a blanket dispute and claim that the debts are not the borrower's. That's not at all. In fact, that in many cases could constitute loan fraud. What we are talking about is how to help your customers understand better credit habits, better credit management, and how to correct the inaccuracies on the bureau. Like I said, that collection account, it doesn't need to be deleted. It just needs to be accurately reported. And that's where James is going to walk us through how to become an educator to our customers And then on section 5, I'll walk you through once you've gained the knowledge and once you have that expertise and understand the nuances of how to coach your clients on how to help them improve their credit usage habits and therefore their score. Then we'll talk about how you can expand that and market yourself as an educator of credit issues to your community, to your business development partners like realtors and financial planners and human resource directors at large employers in your area, and people that can get you in front of groups of individuals who are thirsty and desperate for this kind of information. I mean, I think one of the biggest failings of the American education system today is we don't teach our kids how to manage credit effectively. And how often is it they get themselves in trouble just out of sheer ignorance when introduced to credit in their first couple of years of college? It's this kind of information and this kind of training that's going to enable you as a mortgage professional, as an originator, to have a huge impact on the folks in your community and help them learn better habits for managing credit. So I hope you join us for this program. I'm excited to see all of you on the program. And if there's anything my team or I can do to help encourage you in the growth of your business, please don't hesitate to ask. I look forward to seeing you on the program.